President Obama looking for a parachute as we approach the fiscal cliff. Let's talk to Reuters markets correspondent Ryan Blistelica. Ryan, let's see what the market's doing right now. Look at that. We've actually got green arrows. Folks hopeful, I think, after this Obama meeting with congressional leaders.
Absolutely. People have been worried about the fiscal cliff. That's been the story pretty much every day since the election. People want to know what kind of resolution will be reached, how there will be compromises and so forth. There's a little bit of optimism this morning after the Wall Street Journal reported that the Obama administration appeared to be a little bit more flexible when it comes to spending cuts. That was going into this meeting between Obama and the congressional leaders. That meeting, I don't know if it's over now, but it's
started at 10:15 this morning.
Absolutely.
Yeah.
So I don't know where it is
and
right now.
And it has ended. Yeah.
Yeah. So there seems to be a little bit of optimism coming out of that. Perhaps they're finding points of agreement.
Right.
Obviously, nobody's expecting them to have solved the deal just this morning, but it is the kind of thing where if this is steps forward, this could indicate that the worst case scenario of going over the cliff isn't as likely as people had feared.
Hopefully, yeah. Let's take a look at some of the sectors and how they're reacting to the market today. Telecom and information technology slightly down there.
Absolutely. Telecom is pressured to, again, fallout from hurricanes or Superstorm Sandy a few weeks ago as they continue to struggle to get things back online and have various costs associated with that.
And we have some breaking news, actually, that there's a fire on an oil rig in the Gulf of Mexico. Of course, this is coming off of the big, huge, unprecedented BP settlement yesterday. This is black elk oil, 2 dead and 2 missing there. Not good news. We're going to have to follow that and see how that affects the markets as well. But now we're going to change gears radically because you think it's not a big news day. It is a big news day. Why? An iconic American brand, no more. Hostess Twinkies say goodbye because the company, which was in bankruptcy back in 2004, again bankrupt, saying they're going to liquidate everything, bye-bye the brand. They're going to lay off over 18,000 employees. They're getting rid of the bakeries, selling everything off. There was a strike of union workers, and the deadline to show up to work was yesterday. Didn't show up. They say they can't make and distribute these anymore without the workers who were striking. Of course, the union workers are blaming poor management, saying, hey, you guys were bankrupt back in 2004. What do you think, Ryan? These now cost $20 on the black market, folks. No, I'm kidding. Here you go. The most underrated, I have to say, is the Suzy Q. And I don't know, probably folks not so sad to see the snowballs go goodbye because, you can't get
It's not a color that exists in nature.
No, it's certainly not. All right.
It is troubling news to hear all those people losing their jobs, but as far as the brand itself goes, it is possible that somebody will swoop in and buy it, perhaps a company like the Kraft Snacks food line or Conagra, something like that. The brand is up for grabs and certainly iconic enough. You can see the appeal of why people would want to buy it.
All right, you know what? In the meantime, hang on to these because we can sell them on eBay. No, we're kidding. Okay, let's talk some earnings and go to Dell.
Right.
Once the world's top PC maker, profit fell 47%.
Right, absolutely. Bad quarter at Dell, sort of weakness just we're seeing, not just from the economy at large, but there is a trend that we've been seeing with technology users moving away from traditional sorts of desktops and laptops, moving towards tablet computers like the iPad more specifically. That is not an area that Dell has a lot of exposure to. So until they get that figured out, who knows what they're going to do. Yeah,
stock's down 8% today. All right, let's move on to Sears. Smaller than expected quarterly loss, but same-store sales in bad shape. They're down 17% today.
Right, absolutely. This is a stock that has been getting pummeled really over the past couple of years as they sort of struggle to find a new direction as a lot of shoppers go online or want to shop it directly at outlets like the Apple Store for their various products. Electronics was the big thing that hurt the company this past quarter. They had low demand for their electronic merchandise, and that stuff is higher margin and so forth. So without that, same-store sales came in weaker than expected. Even though the loss in the quarter wasn't as bad as people had been expecting, the sales trend is very troubling, and again, people don't know how they're going to quite change the tide.
Well, if you think about, buying camcorders, I mean, that's like, playing Atari if you have a video game. I mean, it just seems really antiquated in digital cameras when your smartphones and tablets can do all that. Right? All right, let's move on to the hot spot, my friend. And as we do, remember, check out the snaps at the bottom of the screen for headlines of the day. Nike, they've long been looking to sell Cole Haan, and they finally did to a PE firm, right?
Right, absolutely. They sold it to Apex Partners for about $570 million. This is part of a bigger strategy that they have to shed their lesser-known brands and focus on their core brands, Nike itself, the Jordan line, Converse, and so forth. Just last month, they sold another brand. Forget the name of it. They sold it, again, for a few $100 million. These aren't huge deals, but there are just sort of larger trend of the company just focusing
I, for one,
its
I'm
interest.
very upset about this, actually, because for the past 5 summers, I've actually lived in these very affordable Cole Haan sandals that have a cushiony Nike sole. They're amazing.
Yeah, well, I used to line my sneakers with Twinkie cut bars, so I don't know what I'm going to do either. So.
You're out of luck as well. All right, let's move on to Reckitt.
Yeah.
This is the British company that makes Durex condoms, among other things. Ryan,
very familiar.
This story's all yours.
Okay. Basically, they came out and they bid for a company called Shift Nutrition.
Right.
They bid about $1.4 billion for it. It's a vitamin company. Basically, they're getting in vitamins and minerals. They're getting into a bidding war, perhaps, with another company called Bayer, which, of course, makes aspirin.
We
it's
know them well.
Massive company. So that stock is up. Shift is up. Is massively
28%.
28%, just on hopes that either this deal's going to go through or there's going to be a bidding war. We'll just push up prices even higher.
All right, finally, ending the show on a ruckus. Let's talk about Ruckus Wireless going public at $15 a share today.
Right, absolutely. It's trading debut today, and it did price at the high end of the expected range of $13 to $15. Of course, in your first day of trading, you're bound to see a lot of volatility, and the stock is slightly down today, even though it was at the high end.
All right. Yes, down 3% today. Okay, Ryan, thank you very much. Get them while they're hot or not. These are mine. Remember, folks, follow us on Twitter at Reuters Insider and check out our YouTube channel, Reuters.com/ReutersTV. I'm Lisa Bernhard. This is Reuters.